Well, good afternoon, everyone. Welcome to our SRA Accounts Rules Compliance under Agile Working webinar. I'm Kate Arnott, a professional practices specialist at MHA, and I'm joined this afternoon by Karen Hay, Head of Professional Practices for MHA, Fiona Westwood and Robert Bletch. I'm going to take you through a quick introduction to our topic today, and then I'm going to hand over to Karen to cover how law firms have adapted to the rules, the guidance issued since the introduction, and the SRA's response. Karen will then hand over to Robert, who will look at what we've seen already as reporting accountants, the effect of COVID on compliance, and the common breaches. Fiona's then going to cover off at the end the risks in working from home, adapting to the new normal, and what the future of compliance looks like. So, who are we? As I said, we're the Professional Practices Sector Specialist team from MHA. MHA is a network of independent accountancy firms with national coverage. We have Karen, who heads up the sector and is based at MHA Moore and Smalley, Fiona Westwood, a professional practices specialist partner from MHA Monaghan's, and Robert Bletch and myself, sector specialist from MHA McIntyre Hudson. It's been almost 2 years now since the new rules came in on the 25th of November 2019, and these rules removed the prescriptive elements of the previous rules and put in place a framework for self-regulation. I think we can probably all agree no one could have predicted that 2 years ago the way we worked would have been so affected by a global event, and compliance has really been tested by the impact of COVID. How has this affected the self-regulation framework? I think when everyone's not working in the office environments, it's harder and even more important to ensure that employees understand what's expected and required of them with regard to compliance. The working from home hybrid working that we've all adapted has challenged the traditional risk of compliance. New risks are being faced with regard to security and the logistics of actually getting the work done. We're going to be looking at how to ensure compliance with these changing trends. No return. So most firms have embraced the new working pattern and proven that it does work. It's highly unlikely that staff will revert back to a 5-day-a-week 9-to-5 option. However, this means that you need to look at adaptations within your law form. And finally, what does the future hold for legal firms? Without a crystal ball, it's hard to predict, but it's definitely going to cover more geographical diversity of work. The workforce is going to be spread throughout the country. There's an increasing pressure to hold on to good staff and train junior ones. Location is no longer going to be a driving force when people are looking for new jobs. Possible difficulty with PI renewal, which we all know is never usually a fun process, but insurers may take a more pessimistic look about the long-term economy. Firms will need to watch and plan for the planned NI and tax rises, which are going to combat the support packages that were put in place throughout the pandemic. And there was also the ever-present issue of exit and succession plans for firms. I'm going to hand you over now to Karen, who will talk you through how firms have adapted to the new rules 2 years on. Thank you.
Thanks, Kate. Hopefully everybody can hear me well enough. I have been suffering with somewhat of a cold. So those of you who know me normally hear my voice somewhat louder. I'm softly spoken today. So what we're going to do is share with you some of the experience that we've seen from our law firm contacts and clients, what's been happening since we've adapted to the new rules from November 2019. So really, the question which I would normally ask in terms of an open room would be a hands up, who's coping well with 13 rules compared to over 40? Slight difference, yeah, a few differences. So, excuse me. What we've been seeing, obviously, is a lot more of a reduction in the detail that really is there in some ways to help you. In some ways, it hasn't been helpful. I think what we've seen are law firms have been struggling with uncertainty around detail. A lot of the detailed descriptions, the rules and regs that helped you formulate your own policies and procedures, they've gone. So really, what we've seen is a lot of law firms have perhaps left their procedures exactly the same. They're doing the same thing that they've always done. And in fulfilling their role to keep client money safe, they're looking now at what processes might need to change. So obviously law firms tend to like the black and white, that you can do this, you can do that, don't do this, don't do that, do this within so many days. That has all disappeared. Now, accountants aren't really more like the black and white, we're a bit grey. And I think what we've been doing for a number of years is applying a risk-based approach. And that really is how the SRA are wanting law firms to start to look at their own policies and procedures. So where there's been some concern have been, for example, on disbursements, where we've seen the loss of the term professional disbursements, no distinction now between disbursements incurred and unpaid. So there has been some request for clarity in how to treat those disbursements. Another area where there has been a difference in process is on billing in advance. So there has been guidance issued. We'll have a little look at that. But again, because it's a different concept to overlay against more of a looser set of rules. Residual balance is our favourite topic. Now the detail says you have to hold client monies for a proper reason. And all of the helpful notes as to what to do with those residual balances and how to clear them, that's disappeared. So that's been a bit of a struggle. So really what we're seeing is the guidance behind the rules now is becoming very important. At this point in a seminar where I'd be sat with you, I'd be saying, hands up, who knows everything about that guidance? Have you looked at the guidance? It's actually really helpful. So the SRA issued a stack of guidance in November 2019 to sit behind the rules. Remember, it's guidance, it's not part of the rules, but they are very helpful. And as Kate has said, who'd have thought in 2019, when we were looking at the new rules and potentially what changes we needed to make, that actually we would overlay a global pandemic. So the questions that we've been asking firms as we've been performing our audit work have been things like, how have you been signing your monthly bank reconciliations when you've been potentially working from your front bedroom? How have you ensured those client monies are still secure? So if you've received monies into the office, but the office hasn't been manned every day, how have you held on to those monies securely? How have you made sure that you're still banking them promptly? What about opening new bank accounts? I know that's been a nightmare. And then the whole issue of withdrawals from your client account, the authorization process, how you do that when you're potentially working remotely as well. So all of that has been impacted as well on the treatment of your firm's own procedures. So what problems have we been seeing really? The client's own accounts have caused some confusion. You've obviously got Rule 8 that covers the accounting systems and the requirements that you have to follow. But of course, client's own accounts it's not covered by that Rule 8. But you do have the requirement to still perform bank reconciliations. So the question is, how do you perform bank recs if you're not keeping a track and a full log of all of the transactions that you've been partly responsible for? So that's a bit of a mismatch. The SRA are looking again at interest policies. Now, I know the interest rates have been so low that they're probably not going to be impacting. But you are still supposed to be accounting for a fair sum of interest. And as I said, the SRA are starting to look at this again, starting to ask a few more questions. Your trigger for transferring monies from client account to office account has historically been issuing a written notification of costs. That rule has changed somewhat slightly. And of course, when we're thinking about how that impacts on disbursements as well, that has been somewhat of a change in regulation. And then I suppose the issues with working remotely have been making sure that your coffers have still been reviewing, checking your monthly reconciliations. We've had a few problems submitting accountants' reports. Remember, it's still the firm's responsibility to file that accountants' report with the SRA. We've had fun setting up our own systems, but of course we don't get the correspondence back from the SRA. The firm does to say that the accountant's report has been received. And there's still clients of ours that we've seen who haven't really updated their own client care letters, looking now at the updated 2019 rules. So again, just have a little double check at what your client care letters do cover. So I've mentioned guidance, and again, what we need to make sure of is that you've had a good look at what's available. There is some very useful guidance notes available on the SRA website. Here's a few examples of some of the guidance notes. Improper use of client account as a banking facility. So the SRA are still concerned about this. It's still becoming an issue. It's still ongoing. Within that guidance note, there are some case studies which are really useful. If you have clients who run rental properties, commercial or residential, there is some quite useful case study notes there for you to have a look at. Residual balances, go and have a look at the guidance note, because it does give you that actual practical guidance that we're missing now from the new rules. Withdrawal of client monies to pay to a charity, that is obviously covered within those residual balances. Practical notes. Keeping client records, it's always good to just have a dip in and see what the SRA say that you should be doing, and double check. Quick internal audits of your own systems, make sure you're doing what the SRA expect you to be doing. The SRA obviously are very keen, and you can tell they're very keen on the third-party managed accounts. They do keep throwing out more points that look at how many firms are using the TPMAs. I did a straw poll with my MHA cohort, and none of us know any of our clients or contacts who are using TPMAs. The SRA still think it's a good way to go. Maybe have a look at the guidance and see what it is they're flagging up as important. And then, just in case you haven't seen the guidance in a great deal of detail, this slide just gives you the places to double check on the SRA's website. Surprisingly, they've got guidance in two separate places. Not surprisingly, we know. Anyway, the links are there. You'll be able to go, if you haven't had a look at them already, go and have a look at what's there. But you will have to keep an eye on those places, because the SRA will issue updates. They don't tend to shout about it. They just secretly squirrel them away. So you'll just have to keep an eye on those. We always tend to flag up if there's anything interesting going on, or if the SRA are flagging up anything specific. So looking then at the guidance, remember it's guidance, that's not part of the rules. But there's a few there again that we flagged up that might be useful for you to have a look at. One of them is obviously client's own accounts. Because there is that mismatch between the rules, what the guidance actually says, and those bullet points on screen there, they come from the guidance note. So they still suggest that you keep a central register of those clients' accounts. You keep a separate record of those transactions, and you keep a note of your bills. Obviously, the rule says you've got to keep your bank statements, you've got to do reconciliations, and you've got to keep your bills. Now, without keeping a record of those transactions, I do not know how you're going to do the reconciliation. So I would say if you're running clients' own accounts, do have a look at that guidance note. Okay, next section, we're just sort of flagging up what we are hearing that the SRA is saying. So risk and risk-based approach, again, you know, they've been talking to us for quite some time about how we should be approaching our audit work. They are expecting firms to be doing the same thing. You should be looking at where the risks are in your systems and making those changes to your procedures to make sure that you're keeping control where you need to keep control. Kate's already noted, you know, the impact of your systems and controls on your PII renewal. That's going to keep getting harder. Clients' own accounts I've mentioned. Billing in advance is more of an issue now because you are allowed to run, you're allowed to not run a client account if you only issue bills to your clients and receive the monies for the payment of your costs. In reality, that means you could have your office account mixed up with client monies where they're paying in advance. So obviously, issues for that are going to be on insolvency. You know, we always like to talk about dark and depression, you know, death, despair. Insolvency will become an issue if you've had to close a practice really quickly, or if the client terminates your engagement. So you will still be able to, you need to be able to get hold of that money and return it to the client, not having spent it on paying your wages or your VAT return. We've seen qualified reports in the past on residual balances. We've also seen it slackening off during the pandemic because people are working at home. They're just trying to keep the systems running. They're not really doing a lot more housekeeping. So the SRA are going to get twitchy about that again pretty soon. We've talked about TPMAs. I'm not going to say whether I love them or not. You can get me separately on a soapbox on that. But what we thought might be useful is for you to just have a look at the stats of qualified audit reports that have gone into the SRA over the last few years. Obviously, the movement in the rules, the SRA did expect that the number of qualified reports would fall, and that's what we're actually seeing. Now, the 2020 figures, which are showing at just over 800, that's because there has been a lag in some of the reports filtering through to the SRA, and the SRA have said they expect around about 1,000 qualified reports to come in eventually. So yes, we're seeing the numbers dwindling down. Don't forget, all those qualified reports that go to the SRA, they do look at every single one of them. And they've told us they have 3 piles. Pile 1, they're not going to do anything further. Pile 2 is they will ask for a little bit more information. Pile 3 is an inquiry. Now, some of those inquiries are turning up at the door. Some of them are being run as a desktop review, but that's how they are filtering from those qualified reports. So again, I think that the process that we undertake with our clients is to try and close the loop. If there are qualifications, to make sure we are noting what changes may have already been made to reduce the risk of those qualifications ongoing in the future. Now, I'll be handing over to Robert to pick up the next session.
Thank you very much, Karen. Very informative. And I think now we're going to go on to looking at, as reporting accountants, some of the issues that we have seen since the introduction of the 2019 rules. I myself and Kate and colleagues sign off reporting accountants, and some of the issues that we have seen have been present in the old regime, but are still being highlighted and not being dealt with. Karen's mentioned this from only a few moments ago, but residual balances. Firms are still not dealing with residual balances, and as Karen said, the SRA are concerned with larger amounts, but they're also concerned with residual balances that have been there for a long time. So please make sure that you are dealing and clearing your residual balances. Banking issues, again, the whole rent deposit thing has been mentioned, but it is a bugbear of the SRA. They are very concerned, and they're even thinking of becoming more stricter with in respect of what a firm can pay out from the client account. And one of these is the fact of rent deposits, and you should not be entering into rent deposits as a firm where you are doing no underlying work or ongoing work and are just continuing to hold them for the client's convenience, and these are frowned upon. As Karen has said, we only have 13 rules now, and we're in this arena of self-regulation, and therefore firms have to have their own procedures in place in order to make sure they are regulating themselves, and can take those 13 rule framework and make sure that they are following and have tight controls and processes in place. And we are still finding that there are firms who don't have a procedure or accounts manual. They don't have any timings in terms of transferring monies, any details on authorities, and have just relied on the old rules. And to an extent that may be okay, but as reporting accountants, we find discrepancies there, and we have nothing therefore to relay that back to, and we need a framework and a procedures that all firms should have in order to make sure processes are taking place. Obviously, the pandemic has caused issues in relating to staff. So it's the same as accountants as it is for solicitors, but the training of staff over the last 18 months has been particularly difficult. And where staff are not being trained, that leaves open a gap in systems and controls, and exposes the firm for potential breaches and compliance errors. So one of the fundamental things that we as accountants and reporting accountants are urging clients is to keep up and make sure that staff are trained. Karen's already mentioned this, but accounting for interest, it comes back to point 3 about having procedures, but there should be a procedure in place for accounting to interest. And as reporting accountants, we have come across lots of firms that don't have this. It should either be in the client care letter in the terms of procedures somewhere on the website, but clients should be aware of what the interest policy is. Keeping and updating the breaches register. Some clients and law firms, we have seen quite a poor record on their breaches register. It's either not kept up to date, it's not set out properly, it's not come to a conclusion about whether it's a reportable breach or not. And if you do get an SRA visit, it's more than likely that they may ask to see the breaches register. So it's really imperative that this is not only kept up to date, but is set out in a format which is compliant. And I suppose following on from this is firms are just not sure whether or not to self-report, and self-reporting when appropriate. I do understand that firms are very cautious about self-reporting and will not want to do so unless it's ultimately necessary. But often a self-report may result in, or will result in the SRA taking note and saying, thank you for reporting this. We acknowledge the steps you've taken to rectify this and we're taking non further action. But if the SRA do come in for an inquiry and that issue has not been self-reported, it raises more questions and could cause further implications going forward in terms of what they do in order to either issue a fine or refer a firm to the SDT. Again, this has been mentioned, but the confusion around clients and own and joint accounts has not been helped by the rules. And the guidance does offer some interpretations of how these client-owned accounts should be dealt with, but it comes into my top 10 of what we're seeing as reporting accountants. Signing off of bank reconciliations reviewed. The rules say specifically now that a COFA or a manager must sign the bank reconciliations, and we've still seen on a number of law firms where this is not happening. We accept that through lockdown, this has not always been easy, but there should be some acknowledgement and an electronic signature if the person's not in the office. But especially now, there's no excuse for not signing off bank reconciliation and then being reviewed. Finally, on the top 10, firms not reading the guidance. The SRA will refer to guidance in an inquiry, and therefore not knowing the guidance is not an excuse. So here's my top 10 in no particular order of issues that we've seen as reporting accountants. So it's important that you acknowledge these, keep these, tick these off, and make sure that they all are adhered to. So in terms of what we've seen, not only have we seen these top 10, but we've also had dialogue with the SRA in terms of what they expect. And that helps us in deciding whether a breach we see is material or not, or where it's reportable, and what the sort of wind flow direction of the SRA is. So the SRA has said that they expect any breaches that are identified to be corrected promptly. Now, the definition of promptly is not defined strictly, but going back to what we said about the reconciliations, if an error and a breach is found on the reconciliation, it's not expected to still be there on the next reconciliation. So when we are reporting accountants are reviewing, we will expect them to be cleared by the next reconciliation. Any monies lost or withheld from the client account to be replaced immediately. I think that is fairly self-explanatory. Insurers to be told that they can respond if there is an issue, there is a shortfall in client account. Insurers should be told, even if there's only a potential or something that may not happen. And this includes cyber attacks as well, where money has been taken and you in good faith have paid out that money. Insurance should still be told at the earliest possible moment. I think I should add to that. Firms to consider their duties to report to the SRA and not to rely on their accountant. And this has come directly from the SRA. As accountants, we do work with clients throughout the year, but our main source of work is when we are doing the SRA report and the financial statements. If we come across something and say, well, you should have reported that, often it's too late. The horse has bolted and we may be 6 months or a year down the line. So in terms of self-reporting, as we mentioned before, firms have to consider their duties to report. It's not our responsibility as accountants to self-report on the client's behalf. It's for the firms to self-report. So they need to consider this more often. Just very briefly, the SRA said that they expect firms to continue to meet the high standards the public expect during COVID, and must do everything they reasonably can to comply with the rules and follow the principles. And serving the best interests of clients and upholding the rule of law is paramount. Firms are expected to have contingency plans in case for disruption. The SRA have said that they recognise that COVID is an exceptional circumstance, and this was back last year. They had said that the coming months may present particularly challenging issues. But by now, they have said that whilst remaining pragmatic and a proportional approach will be taken, they have said now that those contingency plans should be in place. So during COVID, they have focused their efforts on serious misconduct, not necessarily more trivial ones or ones which are on the cusp of being reported or not, and those who are doing the right thing and those who are not. And just to be clear, documentation is the key. If you are not sure about something, you've done something in good faith, make sure that that is documented, the process and steps taken are recorded, and why you have done so. And if you're not sure, ask. Communication is always the key. Contact the professional ethics helpline or ask for advice. If you do contact the professional ethics helpline, we do recommend that you ask the advisor's name, details, and record the date of the call. You don't have to give your name. And recently, the SRA have said that since the pandemic has gone on for so long now, firms should have adapted to the changes and have systems and control in place to deal with them. So just before I hand you over to Fiona, common breaches and law self-reporting, what firms should be doing. They should be dealing with residual balances, not acting as a bank facility, have procedures in place, train staff, account for interest, keep and update the breaches register, self-reporting to the SRA where appropriate, and be aware of the impact of negative interest rates. Now, a lot of these 1 to 7 we mentioned in what we as reporting accountants have been looking at. So in order to make sure you deal with what we look at, this is again another slightly tweaked and reduced checklist about what you as a law firm should be doing to make sure that you are being as compliant as possible. The only one really I haven't mentioned is the impact of negative interest rates. The SRA have issued recently some guidance on this, which essentially says that some of the banks, especially dealing with foreign currencies, have issued a negative interest rate, which is effectively a charge on holding client money, and that charge potentially can be given to the client, forwarded to the client, where it is obviously reflective of what the firm has been charged. At the moment, as far as UK banks are concerned, we've not seen this, but it's something to bear in mind, especially if you're dealing with foreign currencies, but also on something which may come into the future. And just finally for me, the SRA have said that they expect any breaches to be identified and corrected promptly. We said this in a previous slide, but this is what the SRA have said they expect. So I'm highlighting it again to make sure you are 100% aware of it. Any monies to be replaced immediately, and again, insurers to be told. So these are really important just slides to comprehend, to make sure, and I don't apologize for repeating them, but these are 4 points that really should be in the forefront of your mind when dealing with compliance. I am now going to hand you over to Fiona, who will take you through starting with risks of working.
Thank you, Robert. So during the pandemic, obviously the majority of people worked from home, and we all rushed to put probably sticking plaster type controls in place to respond to that. As Robert's already referred to, the SRA is now wanting us to make sure, and rightly so, to protect client funds, that those controls are, actually less of a sticking plaster and are fully appropriate and operating correctly. So we now have a mixture of people working from home, working in the office, and that's likely to be with us for the long term now. And so whatever controls you have in place need to be able to support that operating environment. Robert, I'm sorry, I can't move the screen forward. Oh, no, I can now, sorry. So when people are working at home, they are relying on the same controls that you have operating in the office. And so that needs to be one set of controls now. You can't be asking your or having the risk of asking your colleagues and staff to be switching between different controls when they're at home and in the office. So that all of that needs, if you haven't already, you need to look at those systems and be very clear and communicate all of that to your staff. Consider also, do you have any staff working using their own laptop, using their own PC at home? Even if they're using work laptops, certainly there's some things like antivirus software. Is that effective? Are backups happening on a regular basis? I'm certainly aware of a number of firms and organisations where backups only work effectively when people are actually on location in the office. Do you need to either make sure people are in the office at certain periods of time to make sure that's happening, or do you need to upgrade your systems in some way? And the same applies for system upgrades. Are they happening on a regular basis? We know how much systems develop. Fraudsters are forever trying to access systems, and fixes and patches are happening. They must be being reflected in your staff's facilities and the laptops and any kind of devices that they're using. Remember also, staff and colleagues might be using their own phones to access emails and your systems. What security have you got in place around them? Pretty much what we're needing to do now is, most of us would have had some kind of policy around what happens and what procedures to follow if a colleague unfortunately left some paperwork on public transport. Effectively, you'll need the same proof processes and controls for if there's a data breach or an issue for that colleague working at home as well. So some of this obviously feels quite obvious, but make sure everyone in the firms knows how to create secure passwords, and they should be changed regularly. There are additional tools to help us, things like Microsoft authentication. Make sure you're using that. Phishing emails are getting more and more sophisticated. You need to keep staff up to date on current issues and examples. They're not so longer do we have the common issue of being easily spotted because of typos and those sorts of things. They're really getting quite sophisticated. So you must have a way of demonstrating and training your staff on those up-to-date issues and how they can spot them, what they need to do about them. You need a plan. You need to update your risk assessment and how you're going to respond to an attack or another incident. Again, that needs to be much broadened so that you consider, what an incident looks like, people be in many more locations, and what are the responses for those different incidents happening. Losses of client data and money are serious breaches of the rules, and possibly a misconduct. So it's imperative that when people are working, just as we would always have had people working in the office, being very clear about client data breaches and money losses and how to respond to those, we absolutely must be clear in the new environment of people working in many more places. What if client money is lost, then you do have a shortfall on the client account, and the inevitable consequences of that. You might find that if you haven't got some of these controls and processes and they're not robust and in place, then you could have a scenario where your insurance won't cover it, and the solicitor's disciplinary tribunal might decide that just the lack of clear processes and controls is in fact misconduct. So moving on and talking about sort of policies, these should be updated to take account of processes where not everyone is working in the same place. Those sticking past policies need to be reviewed and make sure that they're robust and fit for purpose now in this new environment. Robert's already talked about training of staff. I think most firms that I've spoken to have identified that training has been quite a challenge during the pandemic, particularly of sort of more junior staff, particularly if they're not in the office all the time, or in fact if other people who are normally relied on to train them are not in the office all of the time. So there's generally a greater risk around unsupervised junior staff. Will there be sufficient senior staff in the office to train them? And how do you create a culture of being able, facilitating those more junior members of staff, of being able to, when everyone was in the office, it was easy to pop your head up, look around, decide who might or might not be busy, who might be approachable, and then they could sort of pop across and ask a question. How do you continue to facilitate that so that all of our trainees are up to date and suitably skilled to do the work? Interestingly, succession issues have come to the forefront as a result of the pandemic, whether that's around people, smaller practices, people deciding to close their practice. We've certainly identified and discussed with a number of practices the affordability of practice runoff insurance. That there have been some examples of practices not being able to get insurance, particularly in higher risk areas of perhaps conveyancing. More generally, people have reflected on their own personal circumstances and maybe want to retire early. Can the practice afford that? Has that got an impact on overdrawn sort of capital accounts, goodwill, values? Do you actually have the expertise in the firm to be able to manage the client portfolio and the work going forward? If there are any sort of issues and thoughts about that, I'm very happy for you to speak to your accountant to share some of those ideas and experiences. So as we continue to talk about adapting to this new normal, you know, absolutely, it's important to keep good staff and recruit new ones. You know, the shortage of tanker drivers is well known across the country, and we're all feeling the impact and that some degree or level, but actually, you know, law firms have been struggling to attract staff at particular levels with particular skills, and whilst absolutely it's important to you know, have the right attractive environment, think about staff's welfare, to be able to attract the right individuals, to be able to offer the flexible working arrangements. And of course, there are many different types of arrangements that people are wanting now, having had the time and the experience to reflect on that. So you're needing to respond to what the market is telling you, but equally as a law firm with all of these requirements, you need to balance the need to comply with all of these the rules, and manage your risks in terms of breaches. So interestingly, I don't think I've come across any business that had a pandemic on their risk register at the start of 2020. Having now all been through one, it's absolutely fundamental that you have contingency plans in place now for future lockdowns. Outsourcing, that's something a number of firms have sort of tried, looked at a few years back, and not many people moved to outsourcing. You know, is it worth looking at again? Is it, with everyone now not all working in the same place, in the same offices, is that worth looking at? Might that make things more efficient? Might that actually help you manage risk in certain areas? Excuse me. How are you going to keep everyone up to date with the SRA, you know, updates? You need to think about your sort of communication around that. And as I've already discussed, you know, security must be tightened and reviewed regularly. So I've just referred quickly to, you know, how are you going to keep people up to date, and as Karen referred to earlier, the rules themselves are unlikely to be reviewed on a regular basis, but the guidance keeps being more guidance keeps being issued. How are you going to make sure that all of your colleagues are aware of that guidance? How are you going to, you know, maybe you trained people in person before, maybe you relied on those, you know, colleague to colleague discussions. Does that need looking at? So as Robert's referred to, the SRA have been, you know, pragmatic, quite frankly, until now, and as far as they're concerned, we've all had sort of 18 months to sort things out. But if you haven't got robust procedures in place now, that's the sort of thing that may well be triggering more inquiries from the SRA. Nothing to do with COVID really, but the 2019 rules have put greater responsibilities on COFAs and COBs, and indeed this firm managers definition, and basically that's, you know, that's everyone that has some sort of responsibility across the firm. So have you made that very clear to everyone who has that level of responsibility, what their responsibilities are and how they can make sure that they keep up to date with those responsibility. You know, that age-old flexibility versus responsibility. Continuation of a risk-based approach in terms of compliance, that's fundamental. Don't just have a risk register on the shelf somewhere and go, yeah, we've done risk. Risk has to be part of people's mindset now, particularly as we go through with this continued level of uncertainty. And now I will pass on to Kate.
Thanks, Fiona. I'm conscious of time for everybody, so I will keep this brief, but just to pull out the key points from this afternoon's seminar. The struggle to remain compliant during the pandemic, I think everyone could agree COVID was something no one could predict. Firms didn't have a contingency plan in place for a pandemic. Most firms reacted very quickly, managed to put procedures in place. However, as Fiona alluded to, a lot of these were sort of sticking plaster procedures. There's an ever-going struggle because working practices are obviously dictated by government regulations in place at the time, so that's something to keep an eye on. Managing risk is key to remaining compliant. Management control remains key to insurance compliance. That's pre-pandemic and post-pandemic, but make sure you've got careful planning and good robust systems in place. We are anticipating SRA investigations where there are concerns of systems and controls, especially, and Karen alluded to this with qualified accountants report, where these have been flagged by the reporting accountant. The SRA are also now back to on-site visits, so make sure you are prepared if you have had anything flagged on your accountant's report. Communication remains key. Make sure you're talking and instructing your staff on a regular basis. Ask for feedback, especially when they're working from home. Remember to stay in touch. Out of sight is not out of mind. Get professional advice. If you're concerned that your firm perhaps doesn't have the relevant controls or systems in place, ask for help. Don't ignore it. As we say, the SRA will be looking at this. Speak to us about an SRA compliance or financial health check. This helps to identify weaknesses, gaps in your processes and help correct them. It can also help with your cash flow and your management account process. And I would urge you all, if you would, to join our legal accounting forum on LinkedIn to share thoughts and ask questions. We will send you an invite following this. Thank you very much for listening, and thank you to all our speakers as well this afternoon. I hope we've managed to cover the key issues for you. We will be hosting a Q&A session now with the panel members, and we'll be pleased if you can stay to hear some of the questions that have been raised. I am conscious of people's time, and we do have a few minutes left, but if you don't have time to stay and you do need to leave at any point, we will continue the discussion on our LinkedIn legal accounting forum over the next few days. So please do join the group, take a look at it, and if you need further advice, don't hesitate to get in touch with any one of us, and we hope you'll join us again next time. So now I have the panel members back. I can see them popping up. We'll cover a few of the questions that have been raised, if that's all right. Robert, when you were talking through about the banking details and facilities, just wondered if you could cover the point, a client provides bank details by email to transfer the funds. Is this sufficient, or do we need to take further action on that?
Personally, I think you should take further action. We've seen lots of phishing scams and people hacking into emails which look exactly as they were genuine. So I would always do a double check, pick up the phone or do something further to try and confirm it, because it's very easy to hack emails these days.
I think that was my concern as well, isn't it? It's the phishing side of things rather than the SRA Accounts Rules side.
Yes.
Covered.
Yeah.
Fiona, you touched on the responsibilities of firm managers on your slide a moment ago. I had a question from, if I'm a partner but I'm not the COFA and I have no input into the finances or the accounts rules compliance at all, what are my responsibilities? I know into this.
Well, you are still a firm manager. You're caught by that definition, and therefore you can't divest yourself of those responsibilities. So you do have an obligation to have an awareness and an understanding of the key controls in the firm and oversight of them, and understand how they're operating or not.
Thank you, Fiona. I've had a question come up. I'm going to open this to the floor. Evidence obtained from clients has been difficult for various clients. We used to only want original documentation. What would you think is suitable? An email followed by a phone call to confirm the details? So I'm guessing that links in.
To the first question.
With your first question about,
Yeah. I would say yes.
Yeah. I think again it's protecting yourself, isn't it, on that point?
Better to have two forms of verification.
Karen, I know you're struggling voice-wise. Thank you for managing to get through. But TPMAs, you mentioned them. I know you have your own views. But do we know any firms that are using them, and are we seeing an increase in them at all?
So I did mention it very briefly during my presentation. We don't know of any legal firms who are using TPMAs. We also have not had a significant input from the high street banks on them setting up TPMAs to be used. So there are some floating about. I almost think that there's somewhat of a wait and see. But I think from my point of view, soapbox is coming out. If you are keeping control over client monies and you're running a proper, strict, well-controlled accounting system within your firm, you shouldn't need to use a TPMA. I think practically it could be harder to run.
Yeah. Okay, thank you. And then I think another question that's come in, is electronic signature okay for both client and office accounts?
I would say yes, as long as there are processes in place to make sure that no one else can access that signature other than the signatory themselves.
Can I add?
Yeah,
absolutely.
Two signatures, 2 authorisers, separate people on everything, please. Just double up.
Best practice, isn't it, Karen?
Best practice.
Protected again then, yeah. Okay, I'm conscious of time. We will probably be posting a few more questions and answers on our LinkedIn group over the next few days. So as I say, please do join us there. Further guidance on this and other topical issues coming up in the future will be added to the MHA professional practice sector page over the coming months. Also follow us on LinkedIn, Twitter, and you'll be the first to hear about any other upcoming webinars or publications. So I can thank everybody again for attending, thank the speakers for their efforts this afternoon, especially Karen, I know you were struggling, and we hope you'll join us for the next time.